In front of me here is a site that you guys are gonna have to get used to. Now, unfortunately, a lot of people develop a hate relationship with the market, but my job here is to try develop a love-hate relationship for you guys. And that's what the reality is that you will have a love-hate relationship with the market, but most of the time we want to have a good relationship and use it what it's there for and be able to use it to its full advantage. Now, the problem people make is that they think that this is a get rich quick scheme and that they can press a couple of buttons and within a few weeks they're gonna be rich and this is the answer to all of their problems. If that was the case, then there'll be a lot more successful people and life would be too easy. But unfortunately, that is not the case, and you guys will have to put in work and put in effort to be able to trade these markets and be successful in it. Now, there is a statistic that floats around saying that 80% of traders are not profitable. Now, I've heard that statistic a lot and a lot of people say that, and it's true. But the reason why that 80% are not profitable and fail at trading is not because it's so hard. It's the fact that I believe that a lot of the information out there is actually teaching rubbish and forcing people to fail at this because they're either overcomplicating it, not giving enough information, or the information is not personalized enough for each individual to be able to succeed in this field. So I believe if good education was out there, then we would see that rate come down and probably it would be a game of psychology because that's what trading really is once you learn the method, right? So I'm very happy that you guys have stumbled across this video here. Now, this video took years to make, not in terms of editing, but in terms of gathering information, enough knowledge so that I could make this video as short as possible, as well as give you everything you guys need to be able to succeed and get a good head start on these markets, right? So just watching this video is not going to be enough, and a lot of people will tell you, yeah, watch this course, it will be enough. But no, you have to go and do work. There's enough information in this video to develop a profitable strategy. So I'm happy you found this video and I really hope you guys enjoy this. And with that being said, let's get straight into part number 1. Get a notebook, a pen, whatever you want to do to take notes. Be ready for this. This is going to be a good one, and I hope that this impacts your trading career. Good luck, and let's get straight into it. So before we start, if you're new, which I guess you are because that's why you're watching a course, welcome to the channel. There's plenty of content. It doesn't stop here. Once you've learned this content, you can view the vast majority of content. Please feel free to leave a like and subscribe. I post constant updates on my Instagram, that is down below. Also some free groups which you can ask lots of questions and get a lot of information. So please feel free to join that and benefit from that. It is also where we host our free webinars. So with that being said, let's get into the video and enjoy. Alright, so these are the markets here. They consist of candles that are green and candles that are red. That's pretty much it, you know, and they move up and down, they create different patterns, and we can trade those patterns, right? Now, when trading markets, direction does not matter. If the market goes up or the market goes down, direction does not matter. You can make equally the same amount of profits no matter if the market's going up or the market's going down. So it's not like investing where you have to rely on the stock or asset or whatever you may be investing in, the company, for example, to go up. You have to rely on it to go up in order for you to make a profit on your investment. But in the trading world, we're able to do something called long. So a long means that we're able to buy it, which means that we can make profits on the way up, and we're able to short, and short means we can make the equally same profit on the way down. Say that this move from here to here made me $100. If I took the same sell from here to here and it's the exact same distance, I will equally make the same $100. And that is the power of trading, and that is why we like to trade, because it doesn't matter of the direction. Now, a few things here. As you can see, this platform where we can view the market is called TradingView. TradingView is free and also paid, and I'm not affiliated with them or anything. This is what most people use to view the markets. Now, some people trade directly on TradingView, but a lot of people will actually use a broker to execute on trades, but just use TradingView for their analysis. So I will talk about brokers and all of that later on, but first we need to learn about technical analysis. And technical analysis simply means to be able to read these charts. You have to be able to read these charts, read the patterns in order to be able to take trades. So When you go into TradingView, you will have pairs. We are specifically trading here the FOREX markets, which stands for the foreign exchange markets, which is the trade of currencies. Why do we like to trade currencies? Because they have the biggest amount of volume traded daily. They trade around $3 trillion per day, which is a huge amount of volume. And with that volume, we can see consistency of moves, and also we can develop a strategy when we see something consistently happen. Now, what I'm about to show you, technical analysis, the strategy, whatever you want to call it, does work on all assets, because what we're trading is something called price action. And price action means simply trading how the market moves, simple patterns used based on key things that always markets will have, because markets will always have candles, support and resistance, and structure. They will always have that, and we use those three things, put it together to be able, with a few more other things, to be able to take trades. Now, up here you can see here on the left hand side is our pair, right? So in the Forex markets, for example, this is the British pound against the Japanese yen, and this chart will indicate the British pound strength against the Japanese yen. If this goes down, that means that the Japanese yen, the JPY, is getting stronger. If this chart goes up, it means the GBP, right? GBP is getting stronger, right? Because why? We are looking at the pound against the yen. So if the yen gets stronger, this chart goes down. If the pound gets stronger, this chart will go up, right? And that's basically what you have to know. It's not really that relevant, but just to have some information. This works on everything, as I said. So you can be trading stocks, you can be trading gold, you can be trading Bitcoin, or you can trade other pairs. You have to choose a few pairs. Don't be trading all of these pairs here. Choose pairs that make sense to you, right? A good thing to do is trade pairs that you know people trade, right? And you can compare your analysis towards theirs, right? So with that being said, let's get on to step number one, which is going to be candles and time frames. Alright, so before we continue, I've actually decided to do a giveaway. Yes, I've decided to do a giveaway. I don't do much of these, but I thought, this is gonna be a 2023 free course, so I thought, why not give away a Tradesharpe program to help people progress in trading, because this would be a perfect time to do it. And I thought, why not do this and help the community? So if you want to know what the Tradesharpe program is, there's my website, a link in the description, and that'll explain you what you get basically and what it is. And it's going to be a giveaway of one of those programs. Now that program is extremely difficult because it is basically one-on-one, so I can't have a lot of numbers. So to give away one of these is going to be quite good and hopefully benefit you all. So to enter the giveaway, it's very, very simple. All you have to do is comment something you struggle in trading and what you look to improve on, or just comment something you look to improve on trading, and I will select. And also just mention that you hope to join the giveaway, so I know that you want to be part of the giveaway, because it would be bad for me to give this to someone who doesn't want it. And then you have to follow my Instagram and also join the group, so that the point of that is because I'm going to announce it on Instagram as well as announce it in the group. So you have to be part of that to be part of the giveaway, and I will close this giveaway at the end of January, and hopefully one of you will win and I'll be in contact. So best of luck. Be sure to join the giveaway. It will be worth it. So candles and time frames is a pretty simple concept here. As you saw on the charts, we have two types of candles here. We have a green candle, which means price is going up, which I'm going to draw for you guys. So let me bring my drawing tools so it's nice and near. So we have a green candle, which I'm drawing in blue because it looks nicer, which looks something like this. And then we also have red candles, right, which looks something like this. All right. So on these candles, there's a few important things on these candles, right? So the important things is a green candle means that during that time frame, right? So up here you can see there are time frames, 15 minute. Let's say we're on a 4 hour. If I've clicked the 4 hour, this candle is going to represent what happened in 4 hours. So it will open, 4 hours later it will close, and in that time the candle will do what it wants to do, and then we have the information once the candle closes. But we can get candles all the way down to 15 minutes, and our trading time frames are going to be the 15, 30, 1 hour. This is where we're mostly looking to enter, because we don't want to wait 4 hours before a candle closes, and we're mostly entering on the candle closes, right? So that's important to understand, that a candle represents what time frame you're on. So if we go to the 15 minute, for example, if I clicked 15 minute like this, this candle would represent 15 minutes. What has happened in 15 minutes? Now, when I say what has happened, what does that mean? All that means is this would be the opening price. Say we have a candle that goes up, and this example here, this will always be the opening price. So this spot here is where the candle opened. This is where the candle closed, and these on the candle, so this is known as the candle body, this area here. These things here are called the candle wicks, right? And the wicks simply tell you this is the lowest price went in that certain time period, and this is the highest price went at a certain period. But the price opened and closed at this area, right? So wicks can look like anything. You know, they could even be a long wick, something like this. And all that tells you is that during that time period, this is the highest point price went, but we're closing at this point. This is the point that the candle closed. And the closing of candles give us a lot of information, which you will soon understand as we develop into this course, right? So same thing with a bearish candle. Bearish candle will open at this price here, right? So if it was a bullish candle, it would have gone up, but it's a bearish candle. Bearish means down, bullish means up. And a bearish candle during the 4 hours seemed to find its way down. This is the closing price here. This is the lowest point it went, and this is the highest point it went. So these are the wicks, and these are the bodies. And that is a bullish candle and a bearish candle, and that's all you need to know about them. The important parts of candles are going to be the bodies, because they are where the price closed and opened, so they give us a lot of information. Wicks will also be important, but the bodies will hold more importance than the wicks, depending on what scenario you are using. But as a general rule of thumb, the bodies will hold more importance, right? So that is basically candles. So let's go have a look at a few examples. It's not a very complicated topic. And if we go have a look here, so let's take a look here. We're on the 15-minute time frame here. So information here, in this 15 minutes from here to here, the candle went up. So 15 minutes is what? 5, 10, 15, which is 3 5-minute candles. We can clearly see on this chart here that we have a green candle here. So let me remove, I can actually remove these candles here to make it nice and clear, like that. So we can see we have a nice green candle here, which is a 15-minute candle. 5, 10, 15, 3 5-minute candles make one 15-minute candle. So if we saw that this candle in 15 minutes has gone up, what does that mean? That means that we should have had at least 5 minutes, 3 5-minute candles moving up, right? Because what that ended up the 15-minute candle closing bullish. So if we go to the 5-minute time frame, let's see what we find. We have 1, 2, 3 green 5-minute candles, which make a green 15-minute candle, which is a bullish 15-minute candle. So now if we fast forward, where's my fast forward tool? Here it is. Next. Now we find we have a bearish 15-minute candle. So what does that mean? We probably have 3 or probably 2 bearish candles. We know that bearish 5-minute candles, because we know during that 15 minutes price didn't go up. It tried to go up and then it failed. So if we go on the 5-minute, what do we see here? We see the 1, 2, and then the 3 almost bearish 15-minute candle. Now this candle here known as an indecision candle, right? So this is a good example. And an indecision candle looks something like this. Some people online like to call it a doji candle, but all it means is that price reached a low, reached a high, but the body and opened in the same and closed in the same area. So essentially in 5 minutes we did nothing. We went nowhere. We tried to go up, we tried to go down, but we're closing at the same price. And you can basically make that candle irrelevant, because it's not giving us any information. What's giving us information is the candle before and what happened, right? So that is a bit about candles. But what's important here is, if you notice, is that if we go here on the charts and we have a proper look here on the 4 hour, these candles form a lot of different formations here. They go up, they go down, and it's confusing to read bit by bit. Now you don't have to read bit by bit. So just like that, less than 20 minutes in, we're already into the second part of the video, nice and easy. So the next thing we're going to talk about is trend and market structure. Now this is a very, very important thing here, right? So the markets will do either one of 3 things, right? Or they'll do all at the same time. They can, but when you're viewing the markets, you will see one of the 3 things. They either have these options. They have option number 1 is the market will make, let me draw this in an arrow here. Option number 1 is the market will make an uptrend, something that looks like this. Option number 2 is the market will make a downtrend, which looks something like this. And option number 3, which I'll draw in the middle, the market will make a range, which looks something like this. Alright, so these are your 3 options. Option number 1 is an uptrend, option number 2 is a downtrend, option number 3 is a range. So how do we define an uptrend, and how do we define a downtrend, and how do we define a range? It's very, very simple. An uptrend consists of higher highs and higher lows. Essentially, think of a staircase going up and a staircase going down. It's as simple as that visually, but technically, if you were to speak it in terms of words, because some people learn in terms of words, some people learn in terms of visual. So in terms of words, it is a higher high. So this high is higher than the last high, and higher low, which means this low is higher than the last low, right? So that creates an uptrend. Alternatively, on a downtrend, we have a high and a lower high. So this high is lower than the last high, and guess what? Opposite to the uptrend, this low will be lower than the last low. So essentially, that's how you create a downtrend. And if you were to continue this downtrend, right, you would expect, what would you expect? You would expect this candles here not to exceed the previous high, because you want a lower high lower than the last high. Then you'll need a lower low lower than the last low, right? Now the last one is going to be a range. So how do you define a range? A range is a mix of higher highs, lower lows. There's no defined trend. Price is simply consolidating in an area which you cannot define the trend due to the inconsistency, and there's not much you can do in this area. There are ways to trade it, but you want to be mostly trading with market structure or with the trend. So what does trend mean? Without market structure, there is no trend. Without trend, there is no market structure. So they're very important, and they're a very strong couple together. And you need to understand, trend basically means what direction is the market going. Are we going up? Are we going down? Simple as that. And when you view the trend will be viewed from viewing the higher time frames to the lower time frames, analyzing which way are we going. Are we going up or are we going down? Now that might sound easy to some, might sound hard to some, but let's say we go on the 4-hour time frame here. It doesn't take a rocket scientist to tell me that from this point here to this point here, what are we doing in the market? We are going down, right? This is a downtrend. We have a high, a low, a lower high, a lower low, a lower high, and now a new lower low. So what have we done? We basically just done this. Of course, with this big candle in the middle, it's not always, it can be equivalent to something like this. It's not always going to look the same, but what you understand is we're going down here. So what is the trend? Well, I can see the obviously current trend is actually going to be a bearish trend. Bearish means we're going down. Now let's go see. So that's basically what trend means, and we want to be trading with the trend always, right? So there are a few times when the trend will change during your session, and this is what we'll get into this video, so you guys will start understanding. But you guys need to understand the basics first. Now let me ask you here, if I rewind this like I have to this point here, and we look at this section of the market here, right? Which way is the market going here? If you're telling me the market's going down, I think you should close this video and find something else to do, because it is obviously not going down. Why is it not going down? Because it went up on the chart. So what does that mean? That means we have an uptrend, right? So if we were trading during this period, we should only be looking to buy price up, because the trend is telling us we are going up. We don't want to fight it. Why would you fight a raging bull? You know, what are the probabilities? This is a game of statistics and probabilities. You want to make your trading as easy as possible, and don't make it harder by trying to fight against what something is showing you. Don't try to be smarter than the market. Don't call tops and bottoms. Those are career-ending moves. People can only rarely get those right, and if they normally do, it's kind of like a hit, and then you're done. Anyway, so we're going up. So what does up mean? Means we have an uptrend, which looks something like that. Again, higher highs, HH for higher highs, and higher lows, H low, higher high, right? And then what would we have? A higher low, higher low. So what do we have here? We have a high and we have a low, then we have a higher high, then we have a higher low, now we have a higher high. So we are making an uptrend. Very, very simple. And that is how the uptrend is developed here. And that is basically what trend is, put simply. Very, very simple and very clear. So I hope you guys understand that. And that is nice and clear. And that can lead us on to the next section. Now, unfortunately, the easy stuff has kind of started to go. And now we're going to start getting into the more important stuff and the more technical stuff. So let me exit this and we will get onto these charts here. So on every single chart, we have something called support and resistance. That simply means a support basically means where price has pivoted from the downside to the upside. So if we have had price do something like this, we are going down and we've pivoted to the upside. That's a support. That's a support. Any area where we have pivoted creates a support. A resistance is where we've pivoted to the downside, right? So that could be in one candle, two candle, or three candles. Now, one candle would be a weak resistance. Two candles would be an average resistance. But to confirm a high and a proper resistance would be three candles would confirm a proper resistance, and three candles would confirm a proper support, right? But two candles as a rule of thumb is enough to consider it as a support or resistance. So this will be known here as a resistance, so we write that as res, and this here will be known, and as well as this, so these two, 1 and 2, will be known as a support, right? So we write it as SUP for support. So why is that important? Because we want to be trading around the support and resistance. We want to be trading two resistances and we want to be trading two supports. We don't want to be trading at resistance and we don't want to be trading at support, right? So we need to be able to understand where can we trade, and in order to understand where we can trade, we have to understand where our support and resistance is. And this is where we start to mark up our charts, right? So we have to understand before understanding what's going on the lower time frame, because we're going to be trading the 15, 30 or 1 hour. You can choose which time frame. As a beginner, you want to be starting to look for entries only on the 1 hour or 30-minute to keep it simple. But we have to create a story from the higher time frames. What do the higher time frames tell us? So a simple markup here is we have to start marking up from the higher time frames, even from the weekly. And this comes into weekly markup. So a weekly, we can see that this is a support here. Why is this a support? Because the candle came down, the next candle closed bullish, creating a pivot, and this becomes a weekly support, and we mark that as WS. Next time frame we go to is the daily, because we have to create a story, right? So we start from weekly, and we can see how the daily is right next to where the weekly is. We can simply adjust that to there. Now we have the daily. We have to put, we see the most recent. Don't worry about what's been going on back here. Look at most recent what's been going on the chart. And most recently, this is the daily resistance. DR for daily resistance. Why is this a resistance? Because price went up and closed bearish, creating a resistance. Now we also have a daily support here, so we mark that as DS, and now we're creating a story of what zones we have on the chart, right? So next we're going to go to the 4 hour. Again, we can see that this is here. We can adjust this to here. On the 4 hour time frame, we're going to scroll back and see what do we have. Oh, we have a support here, so let's mark this support like so. And now what we have is we have a markup like this. So this is the 4 hour support. We write 4S. Now we go next to the 1 hour, and the 1 hour is going to basically, now we're getting into your trading time frames, right? So here's the 1 hour, that's your support, and that's your 30-minute. So this is now a chart markup. You know where your support and resistance is. So trading at this zone is not going to be a good idea because we know that it is a support. And trading at the support means we don't know what can happen there. Price can bounce off there like it's done here. See, this is a support. Price came, bounce off there, and you'll end up losing a trade if you're trying to sell. Now, what we have to understand in order to take a trade is we have to understand where can we trade, right? So that's where we're going to move on to the next thing is going to be trading zones. And then it's going to be session bias, because we need to know, are we going to be looking for sells or for buys, right? So first let's go and explain. Once you have your markup like this is how you're going to mark your support and resistance. But once you mark your support and resistance, you need to know where can you trade. And where can you trade is going to be defined by zones called LTAs, which stand for low traffic areas. And essentially that means clean candle areas. So if we scroll here to the back and see what we have in the past, we can see from here to here, right, essentially where this is a clean candle area. Again, from here to all the way down to here is a clean candle area, and we can trade where those candles are clean. Why? Because in the past, if price has easily moved in that direction, we can expect in the future for price to mirror that move and easily move. So those become our trading zones, right? They become our trading zones, and you look to mark them up based on that, right? So your trading zones are essentially where your LTAs are. And to define an LTA more in depth, so an LTA more in depth is when we have clean candles, right? So let me draw clean candles. Bearish scenario like this is a bearish scenario, and a bullish scenario, which means price went up. Bullish scenario 2 and 3. These are both LTAs, because if we're looking for buys on this day here and we have clean candles here to the left, we can expect price to mirror the same move, nice and clean. But let's say here we had a resistance, right, which would look something like this. So we know that this is a resistance going across here. We don't know what's going to happen at this point. We could either push above, or we can reject this area and close below like this. So this is why we don't trade at resistance, and that's why we only trade the clean candle areas. So that makes sense. Let's move on to more in depth about trading zones. When it comes to trading zone, the first thing you need to understand is how to identify if we're bullish or bearish. This is going to be very, very important, right? So to identify if we're bullish or bearish is going to start from the daily candles, right? Trend is going to make sense, but we're not going to be trading, you know, if this is a bullish trend long term, right? Higher low, it doesn't matter, because what are we going to wait all of this and miss all of these sell opportunities to catch the higher low? No, it doesn't make sense. So we'll actually be trading within these daily candles. So we need to concentrate on the daily candles here. But what's important is what range do we have? So we can see that this is obviously a daily support here. So if we're looking at a daily time frame, we know that if we are closing this daily candle here, right? So let's take this candle for example. If we're closing this daily candle here on the daily time frame, we only have this space to trade. This becomes our trading zone when looking for sells, because this is our next support. We don't want to be trading at daily support, and this is what people miss out. And how do I identify this zone? Well, as you can see, there's a clean candle here. There's nothing stopping this candle except for this support here. So this is our zone, and this zone is going to be 47 pips. So unless we're trading below this zone, this is going to be on that day our target based on a daily time frame. Now when you're trading a session, right, because as traders we trade a session, you're trading 1 4-hour candle. So that means, and that's how a session normally works, if you know, because there's a dead time between when the next session opens. But so the next time frame that's going to be important for you guys is to be able to check the 4-hour time frame. So what you're going to do is you're going to go down to the 4-hour time frame, and you're going to see, all right, what do we have on the 4-hour time frame? Well, obviously it's very clear. You can see we have a support here, and below the support, this is the same daily support we marked up. So your trading zone becomes this whole zone in here. This is your now current trading zone in the session, right? So this is going to be your trading zone, because you don't know if price can get below this till it does it. So once price gets below it, your new trading zone becomes from here to here, because these are where the clean candles are. So these are the zones, and these are how I mark up my chart. So when I send my analysis, these are the zones I look for to trade in. I look to trade in these simple zones. So now you know that, okay, on the 4-hour, this is my zone, this is the range. You know that if this 4-hour is closing bearish, at minimum, it has the chance to push down to here as a minimum target, right? Extension can happen, but minimum we can get to here. So then after that 4-hour time frame, that just leads you on to your entry time frame. So are you going to enter on the 1 hour, the 30-minute, the 15-minute close? So for example, let's say we're going to enter on the 30-minute close. So
We see on the 30 minute, it is the same clean area. We know, fine, anything breaking this low here, anything breaking this area here should give us the option to sell. First target will be here, second target will be the daily support. So if we take a position like this, this whole area becomes our trading zone. If we see reaction at this point here, we know to close the trade because that's our zone. But on the daily time frame, we should have the space to fill all the way down into here. So let's just go see what happened. And we go next candle, still hasn't broke the low. Okay, we broke the low, we tapped this support. So this was our target, first target. If we start seeing rejection, this is why we mark out our trading zone. So we know there's no continuation. Price can't continue below this until we create resistance below will give us our next target. But we'll see if we that happens. But if you were really in this trade, as soon as we tap this area, you would go break even, right? Because you know, that's the plan. And then you would re-enter once it goes, or you'd re-enter at the break of the lows again here and stop loss above here. So that would be another option. But let's see what happens next candle. As you see, we reject this zone. So this is why it's very important to have your trading zone starting from the 4 hour, because anyone would have, you know, I would get messages saying, Harry, you say that this is a low LTA here. This is clean candles. How come it didn't get filled? Because you're not checking the 4 hour time frame. The 4 hour time frame only gave you options to this support here and you get stopped out. So this is how you have to mark up your zones. Your zones are more important on higher time frames than on the lower time frames. You can't ignore the, you know, I get people on 5 minutes saying, oh, 5 minute was clear. We had clear candles on the 5 minute. How come it didn't work? Well, look how accurately the 5 minute rejected off the support. I never even drew this support on the 5 minute. You guys saw me mark this up on the 4 hour, but look where it rejects. It exactly rejects the 4 hour support. This is why it's very, very important to mark these zones here, right? This is why it's important to have these accurate zones, because once price taps, any rejection here, you'll break even, right? You close the trade, the next entry will come once we start breaking below this position here, right? So this is going to be your next entry. And if we go on 30-minute time frame, we have to wait for that. So let's see what happens if we get below. Nothing. Hopefully we get a close below, so we'll see if we can get a close. That's the close. Now we should be able, if we respect this high here, we should be able now to push down and fill this next zone, because we're closing below, because this is our next trading zone. If we're below this zone, the next zone we marked on daily, and if you look here on 30-minute, we are fine all the way down to this zone here. So ideally we should be able to fill this zone. So what happens? We fill it in one candle. It's as simple as that, right? And you can see how that played out. It's zone to zone, and this is how you mark out your zones. You have the clean candles. Clean candles mean there should be no obstruction on the way down, but it's very important that those clean candles also match on your higher time frames. The daily and 4 hour are your key time frames. You need to have clean candles and also on your trading time frame. So what I mean by that, and this is how I'm going to end the video after showing this example, because I think that's very, very clear, and you can see how that trade played out. Very simple trade here, zone to zone, right? Now what I mean, you need to have clean candles. Let's say the 4 hour time frame. All right, we'll take an example like this. Let's say the 4 hour time frame looks something like this. So let's rewind to here. You know that you have your next support is going to be somewhere around here. This is your next support. This is clean all the way down to here. So you can expect the next 4 hour candle to come down and fill this zone. But if you're going on the 1 hour time frame, you can see it's also clean on the 1 hour time frame, so we can expect it. But let's say we're entering on the 15-minute time frame, and you see these wick rejections and this support here. This is not clean on the 15-minute time frame here. This is not clean. This is a support here. You need to wait for it to get below your support to fill these candles, right? So once it gets below the support, here's below the support, you can expect a pullback and then continue, right? So there's the pullback, and now we should expect it to continue after this candle, right? So see exactly that, and it filled zone to zone. Very, very, very simple here, guys. And you know, why did I say you can expect pullback to continue? Because that's how price action works. Creates new low, pullbacks, continues, right? So that's why I always try, you know, if you watch my videos, I show entering on pullbacks, but it's very important to make sure that the zone was validated first, right? You have to make sure that this zone is closed below, then you can get the clean move, and then your zone will be filled respecting this structure here, right? So once the structure is respected, you can trade zone to zone. That came from the 4 hour, 1 hour, and then the 15-minute time frame. This was the important closure right here, right? So this is the closure that was very, very important here, which gave you the option to be able to fill this whole zone here, which you can see happened in this one candle again.
All right, so now we talked about trading zones. We have to talk about pips. So what are pips? Pips are essentially, if you go on TradingView here to your left, you have a measure tool and you can measure. And if you see here on the left hand side, we have a number here. Now this number represents pips, and this is how the Forex markets move, and all markets move are measured in pips. So 51 pips is important because when you're trading, you need a good range to trade. You don't want to be trading anything less than 10 pips, right? So also when you start trading, you're going to be using something called lot size. Lot size is what is used to calculate how much risk you're using. So I'm going to give you this template to understand what is lot size. So you're going to use that when you execute trades on the broker. So one lot, right? So we write that 1L. One lot, let me write that nicer. One lot is equal to 10 USD, if we're using dollar, per pip. So 0.1 lot will equal 1 USD. Bit hard to draw with a mouse. Per pip. So 51 pip move using a one lot will make us 510 USD. Using a 0.1 lot, it would make us 51 USD, right? So that is also important because if we lost this trade, we would be losing 510 USD, or we would be losing 51 USD. So we have to calculate our ranges and calculate our risk based on this. And that is how we also, in our trading zones, we need to make sure our zone is bigger than 10 pips to be able to take a profitable trade, because we need more than 10 pips, right? So that is exactly how we are going to do it.
When it comes to trading, one of the most important things is having a session bias. What are you going to do in your session? Are you going to look for buys? Are you going to look for sells? What are the areas, and so on? Now, this is very, very important. Even though on the macro trend, we might be going up, at some point we're going to have a pullback, and during that pullback, you can take advantage and look for sells. But that all comes from session bias. Now, I have a very big gift for you guys because I've created an indicator that's going to help you understand what session bias is, and you can look to follow that indicator to see what should I be looking for in my session, buys or sells. But first of all, it's not as easy as that. I need to explain to you how it works so you guys can be productive and actually get session bias and start taking trades in the right direction and make things simple. Today, we're going to look at session bias. I'm going to teach you guys how session bias works and what to do when finding your session bias, right? What are you going to look at? And the very important things is going to be the daily and the 4-hour candles. Those two candles are going to give you a lot of information when it comes to trading a session, right? So when it comes to session bias, the first candle we need to look at is the daily candle. So let's take this example here. We pull back, we created support. The previous daily candle here is closing. We'll take this next one. Is closing bullish here, right? So if the daily candle is closing bullish from the daily time frame, that gives us information that we should be taking buys, right? We should be looking for buys on a daily time frame because the daily is closing bullish. But that doesn't have any relevance to our session because our session, we're only trading one 4-hour candle. So you have to look at what the previous 4-hour candle has done in order to get probabilities of what the next 4-hour candle would do. Because if I told you, if you saw 4 4-hour candles going down, what do you expect the next one to do? Go down. If I said you saw one 4-hour candle going down, what would you expect the next one? Probably to go down. And vice versa. If you've seen 4-hour candles going up, you expect it to go up. And same with the daily, especially if we're creating support. So a daily candle closing bullish indicates support. The next thing you need to do is go to the 4-hour time frame. All right, so when you go to the 4-hour time frame, let's skip to London session. So London session is at 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we're going to skip to this and see how we close. All right, so 4-hour candle, need to go back one candle. So 4-hour candle at London session has closed and the 4 hour is closed bullish, which means if the 4 hour is closed bullish, we should be looking for buys, right? So previous candle closed bullish, we should be looking for buys. Why? Daily candle is bullish, 4 hour candle is bullish, which means our session is bullish and buys is what makes sense. So if I go bring out something I made for you to make this clearer for you guys, which I drew here, right? So if the daily candle closes bullish, so we'll use BU for bullish, and then the 4 hour candle also closes bullish, bullish as well, BU for bullish, that means we should be looking for equals buys because we have a bullish session, right? Fix my spelling. So if the 4 hour candle is closing bullish and the daily candle is bullish, we should be looking only for buys. So let's see what ended up happening if we were to only be looking for buys. So we expect the next 4 hour candle at least to come up to this resistance, you know, and that's what you have to consider. So if we consider next, boom, what made sense? Buys. You can see sells were never an option. Forget this, oh, we're at resistance. No. Daily close bullish, 4 hour close bullish. Your session, so this 1 4 hour candle here is your London session and where you should be looking for buys, and you can see the next candle continued up bullish here. So that's very, very important to understand that is how it works, right? So let's go and see another example, right? So let's take a bearish example here. So let's go and find a bearish example. Price at resistance here, right? So we're gonna come here, we're gonna go rewind to this area here like this. Okay, daily candle bearish, let's see if it works. 4 hour, now we skip to London session, so let's find London session. London 20, 21, 2, 3, 4, 5, 6, 9, 10, 11. So London session, skip to London session because I'm showing you this based on London session. Okay, London session comes, 4 hour is bearish, right? Daily is also bearish, right? Daily is bearish, 4 hours bearish. What do we expect the London session to do? Well, we expect London session to continue down. So let's see what ends up happening. Do we continue down or not? Next candle continues down and boom, we're continuing down for London session. So let's see if we get even more continuation, which we do. Why? Daily candle, previous daily candle close bearish, previous 4 hour close bearish means your session is bearish. Very, very simple. Now, in order to help you guys, if that's a bit confusing, I have made an indicator. So this is the part you've all been waiting for. I've made an indicator to tell you if your session is bullish and bearish. So what you're going to do to access this indicator is you're going to go to indicators and you're going to search this here. I'm going to leave a link in the description as well and also how to do this. But you're going to search Tradesharpe session bias. What's going to happen once you click on that indicator, you're going to get on the top right here. It's going to tell you if your session is bullish or bearish based on these 4 hour candles without you even needing to look. So if you got confused, you can understand. So obviously, if we rewind to this London session here, so this is when London opened around this point here. So let's rewind to this point here. You can see it was telling you it's a bearish session. So if it's a bearish session, we should expect more sells. And what ended up happening? We got more sells, right? So this is why it's very, very important, and this is what the indicator is used for. So let's go and see an example of how the indicator works with a bullish session here, right? So let's see if we have a daily candle closing bullish, right? And 4 hour candles closing bullish. Let's take this example up here. So let's rewind to here. Daily candle closing bullish. And let's see what we have on the 4 hour time frame. So we skip again, same story, skip to London session. Now it says mixed because we're not in London session. So London's, it works with New York, anything. It says mixed because the daily candle hasn't closed. 9, 10, 11. So let's see when the daily candle actually closes. When the daily candle actually closes, it will flip. Yeah, that's the daily close. You can see the gap. Bullish session means we should be looking for buys. What happened? Buys make sense. When we come to London, still a bullish session, which means London should give us buys. What ends up happening? Boom, London gives you buys. Why? Because it said bullish, right? Because those are based off the previous daily and previous 4 hour bullish means you should only be looking for buys. Now the big question is, what if we get this, a mixed session? Now this is where it becomes very, very complicated, and I probably have to make a whole new video to explain a mixed session. A mixed session means that we have possibly, right, and this can work either way. We have a previous daily candle that's bullish, for example, and then we have a previous 4-hour candle that's bearish, right? BE for bearish. So this is now makes you have a mixed bias, right? So this is when the indicator will flash something like mixed. So example here, we have a 4-hour candle closing bullish here, and we have the daily candle closing bearish, which is why it's telling us a mixed session. So how do we trade a mixed session? Now, this is what I said gets very, very complicated, right? And this is why I need to make a separate video. I want to keep it simple, this video. But mixed sessions, this is where you have to use your knowledge to understand trend. You have to understand where the candles are closing and how many candles are closing. The one thing is the daily candle will always be stronger than one 4-hour candle. So if the daily candle has closed bullish, right, but only one 4-hour candle has closed bearish, buy still makes sense. One 4-hour candle will do nothing. And there's a great example on the chart of that, which is here. We had a daily candle closing bullish, and you'll see how this says mixed session here, right? So if we go back to this place here, and you can see it's saying mixed session, right? So mixed basically means you can look for buys or sells, right? Based on how, because when the candle before your session is bearish, right? So it created resistance, but all of these bullish candles, one bearish candle is not going to do anything to that, right? So for me personally, I'll still be looking for buys based on this bullish pressure. But since it's mixed, right? Oh, this candle hasn't closed, so let's skip 1 hour so we can see this candle close. There we go, the candle's closed. So personally for me, as you can see how this ended up happening, I would be looking for buys only. But what ended up happening, there was an opportunity to sell. You can see we pull back, people can sell, hence it's saying mixed. You can sell, but buys make more sense because of the bullish pressure. Similarly to this week, if we go to this week and see what's happened, we had daily bearish candle closure. So daily always stronger than 4-hour. Only one 4-hour candle closed bullish. But then what ends up happening, it's not enough to kill the daily candle and we end up closing bearish. But again, as I said, I need to make a separate video. When you have a mixed session, you need to consider, are we at support? How many bullish 4-hour candles are closing, right? And what is the trend doing? Does it make more sense in the market to take buys or to take sells, right? If there's an option for both, it's a mixed session. You can argue both, fine. But one thing about mixed sessions is if you come to your session and you have two bullish 4-hour candles before your session that have closed bullish, then it makes more sense for buys. Same when it goes for sells. It will make more sense for sells if you have two bearish 4-hour candles before your session, right? And that's what I'm going to upgrade on the indicator soon, but I don't want to make it too confusing. I want you guys to understand the fundamentals first, basic indicator, then you guys can look. So I hope you guys will utilize this indicator. Start getting your session bias, looking for buys or looking for sells in your session, not looking both, oh, buys here, sells here. No, stick to one bias, follow your plan, and let me know if this helps. The 3 best price action entries. Now this is not going to be any type of video where someone just tries to sell you on an entry and tell you that the best. No, this is a tested and a proven 3 best entries, and 3 good entries, I would say, when trading price action to catch moves such as this. And if you open most YouTube channels who are saying follow this best strategy or follow this, they're actually going to just teach you the strategy without actually showing you that it's profitable. But these 3 entry techniques have been back tested through many iterations, and just as an example, here is basically a lot of iterations back tested on the strategy, and you can see I've averaged, not because these numbers here are based on different time frames here, but I've averaged out for you guys on basically setup number 1, setup number 2, and setup number 3, and these setups are coming in at 75%, 82 and 76% win rates, which in forex is considered a very, very good win rate and a very high probability, especially for such a simple setup. Now, this is not the end all be all of all setups, but these are some very, very important setups that will help you. And as I said, these are just 3 entries because I want to make the 3 strongest entries, or the 3 very good simple entries that will help you in your trading. Now, you might not find them every single session, but these entries are really going to help your trading. So, but with that being said, we need to get into setup number 1. So setup number 1, these are all based on price action trading. So if you guys are new and you don't know what price action trading is, I highly advise you to watch my full price action guide. I'll probably link it up somewhere here. or you need to understand that this is a trend trading strategy. So this is not counter trend. We are looking to trade with the trend. And if you don't know how to identify a trend, you should not be watching how to enter a trade, because one of the most important things is finding out what is the trend, right? So I can guide you to my 4-step trading strategy video, and if you follow that, that should help you. But I want to make this video and show you guys what are the 3 very, very strong entries in Forex trading. So number one is, of course, we're going to need to have trend on our side here. Trend is very, very important, and you need to be following the trend. So for this example, we will be using a bullish trend because I prefer to draw candles towards the upside. So let's go to a clean here. So market is going up here, so we need to understand that. And setup number one we're actually going to look at is going to be a simple closure above a range. So what we're going to do is I'm going to get my drawing tools out here, and we're going to normally pre-session. So you want to be taking these trades and times of volume. If you don't know times of volume, you can search. It's pre-London, London, pre-New York, New York, and sometimes Asian. These are the times London close, but I'm going to recommend you take these type of setups either pre-London or London Open, or you take them at New York or pre-New York. So what we're going to do is, if we're on a bullish trend here and pre-session here, we've been pushing up here, something like this, and pre-session we've decided to create a range here. So we pull back now, like so, we pull back, and now we come back up here. All right, so here's the example. So we've created a range. Remember, what is the trend direction? Well, you have to remember the trend direction is actually going to be bullish here, right? So we'll actually change that color to make it clear, maybe make it purple here. So trend direction is bullish, right? So we're bullish trend. And now what we're looking for is, since we're bullish trend pre-session, we have created what is known as a support and a resistance here. Very, very simply made. And you guys should know what that is. Now, if we want to continue this trend, if we're going up, we should be making higher highs and higher lows, right? That's what an uptrend is, right? So uptrends make higher highs and higher lows. So if this is a low, we expect, if the trend is going to continue, we expect highs to be made. So a simple setup that we have here is we actually have the opportunity with time of volume for price to close above this resistance here. So, and if I keep looking up at my screen, it's because I have another monitor here and I have my drawing tool. So don't think it's something weird, but here we have a resistance here, we have a support here. Now we're not looking for sells below the support, but what we'll be looking for is, we'll be looking for buys above this zone here. So once we get this candle closure above this zone, it's very, very simple setup here. And what ends up happening is we actually get a candle closure above here, and we can look to enter and keep our stops below the previous candle. Oops. And we can target the next resistance. So wherever your resistance is, let's say we had a resistance up here, that would be your target. And you'd look for the next candle to open up and do something like this, right? So you would look for the next candle to come along. You'd look for it to make a bottom wick here, something like that. And boom, drive up towards your take profit. And that would be the plan here, right? So that's what the trade would look like, and that's what you would want to take here. So this is the very easy setup. Number one, you need to have trend in your direction, wait for a range, and when it closes above a range, you look for the entry. And this is going to be a very basic setup here. Now a lot of people are going to say, oh, what if we reject here because we're closing above the range? Now this is very, 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 very important, guys. I can't express how important this is. And the key part to the setup is, on this bullish trend here, you need to have on the left hand side, okay, you need to have on this side of the chart, you need to have clean candles. You need to have candles that look like this, right? You need to have candles on the left. So I'm going to draw this and then skip a bit. So when you take this trade on the left hand side, you need to have an LTA. It's very, very, very important here to have an LTA. So I'm going to mark that out as an LTA here. Where's my drawing? Here it is. So you need to have a LTA on the left hand side, and LTA stands for low traffic area, or stands for just clean candles. You need to have an area that doesn't have resistance. If it has resistance, if it looks like this on here, price can reject at any point. But if it's a clean move, we should be able to get a clean move and avoid a fake out, right? So the most times you're going to get a fake out is if we have a lot of wicks here. So if these zones have a lot of wicks, you might get a fake out back into the range, and you need to make sure that this LTA is very recent. If it's an LTA from 6 days in the past, it's not really going to be a good option and this is gonna be the most high risk setup because you're expecting price to continue. So with that being said, if this is the most high risk setup because you expect price to make a new high, what is going to be a better way to enter? So I'm going to show you that in the next setup. All right, so setup number 2 is going to be very similar here. We're going to have a bullish trend and price is going to be trending up here. Now, what's going to be very important is that we're going to look for price to make a support. So if price is trending and we're seeing candles start to push up like this, right? So if we're seeing candles on the chart start to become bullish and they're pushing up like this, you can't just keep taking trades because you don't know when the next candle is going to reject. But if we start to see something form like this on the charts where we start to get a pullback here and price starts pulling back like this, we're like, okay, fine, good. Now what we need to look is we need to look for some support to form. So if we start seeing price pull back to a zone, let's say back here we have a support zone that we know that price came back to. So we see something like this, and this is going to give you more confidence here. So let's say prices pull back to this support zone. So this is going to be our support zone, and we see something like this. So this next candle drives down here and leaves a rejection wick from our exact zone, and the next candle ends up closing bullish here. If you see this candle closing bullish here, respecting these lows, right? Respecting the lows, what you can end up doing is taking a position based on this at the break of the highs. Break of the highs, candle below these lows here that it was respected this zone, and your target is going to be the high here like this. This is going to be your target. Now I drew this not to scale, so it's not 1-to-1, but you get what I mean, right? So I should have drew this bigger, but it's not drawn 1-to-1. So this is going to be your target, and your entry is going to be here, and your stops are going to go below here. So what you expect here is you have a support here that we're rejecting. Price made a high, came back down, rejected a previous support, and created support. This candle here is going to be very important. Now, before I said, I forgot to say this information, and I'm probably going to cut this part and put it in the first part, somewhere in the first part. But before I tell you about the rest of the trades, these trades are going to work the best on the 15, 30 minute and 1 hour. So if you average them all together, those were roughly the percentages. But I would recommend, if you're a beginner, to practice these on the 30 minutes, and when you get more advanced, you can start moving down to the 15, and you can, you know, try to improve your trading that ways. But these are going to be the 3 simplest entries and very effective entries for you guys in trading. So once we create a support here, following trend. Now all these setups works for sell as well, right? So sell, if we get a closure below the range, that's also a sell, you know, and if we get resistance formed, that can also be a sell. So I'll show you examples of all 3 at the end of this video. But for now, let me just continue showing you this. So when we have a support here, what we can expect is we can expect the next candle to wick down, of course, here and drive up towards your TP, right? And that is going to be this simple setup, and your target's going to be here. You don't need an LTA on the left because the chart has formed a low traffic area and is forming support. So you can take this and take the trade towards the top of the range here, and yeah, it's a very effective method, and it's used a lot in price action, and it's a good one if you're coming away from the zones, and is very effective. Now let's move on to the last setup. So the last setup is going to be very similar to the first setup, and it's going to be a mix of kind of all the setups. And this setup is a very effective setup, but we don't always get it on the charts because you have to wait for it. But if you do see it, it is a very effective one. And now what's this going to be is when you get a closure above the range. Now you have to understand that we need price to be trending. We need price to close above the range and start to move. We need it to be in an LTA. We need price to be in an area where price can move, right? So please check out my LTA video if you don't know what I'm talking about. Otherwise this won't help. But what we need to happen is once we get a closure and we see price start to push up like this, what can end up happening is we can get a small candle like this. Let's see if we get this drawings, and here we can get a small candle like this. And then what we have is we have a candle that does something like that. And what you can end up doing is you can end up taking the trade once we see a bottom wick and breaking this high. So a more impulsive entry here. And once we break this high, we can take the trade towards the upside, 15-30 minute, it will work. Now, what does this trade mean? Well, basically all this is on lower time frames, and I teach this in other videos here, is on lower time frames. What we're basically seeing here is we're seeing price break out of the zone, pull back, create some support, which is in that candle, and continue. And you're taking the continuation, breaking the high to continue price, right? So that is what this is. It's creating support above your zone, and this is a very high probability setup. So with this setup, what you're going to do is your entry is going to be when you break the high. Very simple, following trend, breaking the high here, and that's how your entry will look to be, breaking the high. And this can happen anytime. It doesn't necessarily have to happen once you break out the range. Price can be trending and you need to wait for a pullback, but once you see a pullback, you see this, and your target is going to be the next resistance. Very important, always target the next resistance, right? So it's always going to be important, target the next resistance. Make sure you have your zones marked out properly so that you're not just taking these at random time, because most people, they fail and they'll get a fake out when they are not targeting the right zones, right? So when you understand where you are in the market, you'll understand where most likely there will be a fake out, right? So this is another very effective setup here, and this can happen just when price is trending. Even if we minus all of this, so I'll screenshot this quickly. So even if price is doing something like this, where we are just trending like this, right? So we've trended from a support and we're just going up, you can still enter. Once we see this in the chart, this will give you an opportunity to enter instead of entering on a random candle and getting a big drawdown candle where it stops you out. So these are very, very effective. And again, stops below this candle here, very important where to keep stops, not below this current candle, below the previous candle. Because if you know that if it's breaking this candle and continuing down, you know that this becomes a resistance here and price is going to continue down bearish. What's very important here is you need to take these setups in times of volumes. Why do you need to take these setups in times of volume? Otherwise, this will end up being a resistance. So make sure you're taking this when the market's pushing hard and you need an option to get in. So this is a very simple video which covered 3 very effective setups in a very simple way. And this is my goal of this video, was to give you guys basically the 3 simplest forms of entering. Now, you'll need to practice this, you'll need to backtest this to get to understand why it makes sense. But these are the basis of the ideas. To wrap up this video, I'm going to clear all these drawings and we're going to go try find 3 examples raw without me knowing what's on the chart of basically what I just explained. So obvious example number 1 is the closure above the range. This was pre-session. Well, what did we have? We had a range here. Price closed below the range. So then we take a short position. Boom, candle stop loss above that. And you continue the move down. That's setup number 1, remember? So setup number 2 was finding price at a support. So if we go back and switch to a bullish trend here, we can see this is setup number 2. Price pull back to this support here. So if I draw this support back here, you can see this is a whole support zone. And even if I just draw a line on top of this like this, you can see it pull back into this zone here, created a support here on the 15-minute, long position here where candles below there, and your target is going to be here. So that's an easy 1-to-1, and that's the trade. Now let's go see if we can find setup number 3. So we're going to need a time of volume. And what do you know, when we are pushing in the market, we have 2 chances here. Here's a nice example, this one here, breaking the high, boom, like this, candle below here, above the range, continuing to the next resistance, because we closed above here. So if we look at where's our next resistance, it will be somewhere back there. But you can see how that trade plays out. You'd probably just catch this candle, to be honest, and that would be enough. So that's 3 examples very quickly on the chart. And you can see how powerful price action is because you're following what the candles do, and these things happen a lot. Step number 1, gonna probably pop it on the screen somewhere here, is gonna be to learn the basics properly. So you have to learn the basics in terms of learning what are the basics in trading. Since I promote price action and that's the way I trade, you have to learn about what are the candles, pairs, trend. Once you learn these basics, some great sources to learn these basics is Baby Pips. No need to do the full thing. Once they get into moving averages and all of this stuff, leave it. Just learn the basics of what is a pair, what is a forex session, these are the real basic stuffs. Then from there you can go on to learn trend, price action. You can go on to learn what is candlesticks, what is candlesticks closures, what is bodies, what is wicks. And the best thing is, on my channel, I have a video part 1, 2, and 3 of the beginner guide to trading. So you guys can check that out if you want to learn the basics. Once you learn the basics, that's a very simple step and will take you about a couple of weeks, or you could even finish it in a day if you want to. Now that takes us on to step number 2. So step number 2 is very, very, very important, right? Step number 2 is stick to one style of trading. I can't emphasize this enough. I see a lot of people out there on the internet. One day they're trading this style, the next day they're trading this style. One person's trying to sell you, if you trade like this, you trade like the banks, and that sounds the best. But in reality, trading should be to make the profits in the easiest way possible. That's why we trade. Why would you make your life even harder, right? So stick to one proven style. Make sure that they've shown you on their channel or wherever that this style works. I have multiple videos on my channel showing me backtesting my price action strategy. I have plenty of videos showing you how I go through it and what is my win rate, what is my win rate average, and what setups I take. So make sure you follow a proven style that is proven to be profitable. So once you find that style, you have to learn it and stick to it. Don't be changing, even if it doesn't work. If it's proven, it does work. It's just your user error. So make sure to stick to that style and improve on it. Then that will take you to step number 3. So once you've learned that skill, you've watched videos, I have a full price action guide, which I'll link, as I said, every single step here. I have a video to accompany it, so you guys don't have to go searching and get confused. This is a very straightforward and a very, very important video, so you can watch that and learn that. The next step, and this is a very important step, I don't understand why people don't do it, is you need to make a trading plan. What is a trading plan? Well, in simple form, a trading plan is exactly what you're going to do when you reach the markets, right? So when you go to the markets, I'm going to wake up, I'm going to analyze the charts, I'm going to look for possible setups, and this is the exact setups I'm going to look for. You have to have your exact setups you're going to look for, and they have to be tested. So again, I have a video explaining exactly how to make a trading plan, and on top of that, I have a free template for a trading plan in my Discord channel, so you can also check that out and use that template to help you guys make a trading plan. Once you make your trading plan, you're halfway there and you're almost ready. The next step is going to be an important one. So step number 4 is probably the most important step of this whole process. Once you've finished all of that, you're going to back test your trading plan. You can see all the videos on my channel of me showing you how to back test. You're going to back test, and on an Excel sheet, I also have this Excel sheet in my Discord, you're going to record what information are you getting from your trade. So if you take this setup, let's take something very, very simple. Let's say a 15-minute candle closing above a range. You take that setup, every time you see it, you press enter, you record, does the trade win or does the trade lose? If the trade wins, you put win. If the trade loss, you put loss. And at the end, once you've back tested 50, 60 times, you'll realize, oh, this setup has an 80% win rate. So I know 80% of the time, if I follow these conditions, if I follow my plan, I should be profitable. And if you know this, then you will be able to be a successful trader because you know that your plan is solid. When you're beginning, you'll see that your plan might not always work. You might have less than a 50% win rate. And that's the time where you have to make adjustments. That's where you have a community. You ask people, listen, it's not working. Maybe there's a fault in your psychology. Maybe there's a fault in your execution. Maybe your markup is not good. And these are where all the factors. So on paper, it sounds easy. Make a plan, backtest it. If it works, you're profitable. But to make that trading style and to make that plan a very effective plan will take time. And this is where your work as a trader has to be done, right? And this is where people think that trading is very, very easy. But this is where the work is done. But once you get that plan done and you have at least a 60% win rate is enough to be profitable. If your wins are bigger than your losses, even a 50% win rate is enough to be profitable. You can only improve from there, and then your trading journey can start and you can become a better and better trader. So I can't emphasize how important it is to back test your plan. Now, going on to step number 5. So step number 5 is either open a demo account, or if you know you're going to treat a demo account without any emotions, open like $100 account or a $50 account, whatever the minimum deposit is. Deposit that minimum amount and risk $1 per trade. Pop a 0.01 lot, or pop a 0.1 if you actually want to feel how it feels to lose, and practice your trading. Put money in, or if you really don't want to put any money in, go on a demo account and try your plan. You're backtesting your data, and go a month on a demo account and see how it works. See if you're profitable, see if you're making profits, see if things are going well. If that's the case, then you can start depositing more money into your account, upping the risk, and from there it's only up. And from there you start to become a profitable trader, and you realize that if you followed these steps from the very beginning, it would have been a lot easier. So step number 6, this is the best step out of all the steps, because this is the one that you most look forward to, is profit. Finally, step number 6 is going to be, once you find an effective trading plan and you execute all of the other 5 steps, step number 6 is going to look to profit on your trades and increase risk. What you're going to do is, as you get better, you'll be able to risk more, and when you risk more, you'll be able to make more money, which is, I assume, is most people's goal when they start trading, right? So yes, it is a journey before you do it, but once you complete these steps, it should put you on the right path to be able to either improve as a trader or actually start making good profits. So I really wanted to get this video out. It's very, very simple. The steps are very simple. So I really hope that people find this video so that they can be put on the right. So yeah, that's why I wanted to put this video. If you want me to, I will leave this document that you see. I'll probably pop it up here, a screenshot or something.
So you've reached this far into the course. Before we end it, I want to talk about brokers, right? So brokers is an important topic because we have many types of brokers out there. You'll have to find a broker that is well used and is available in your region. So be sure to join our group down below to basically discuss and ask if that is a good broker, we recommend it, if you think that they will be good. Once you find a broker, you will be trading on something called MetaTrader. There are plenty of videos out there on how to use MetaTrader. I would encourage you to watch that and understand how to use the platform to execute trades, calculate lot size, and calculate your pip size. So this is where I'm going to end this course. I really hope you guys benefit with it. If you made it this far, please don't forget to leave a like and subscribe and join the community down below. And I hope that this will help your trading career. Much love, guys. Take care, trade sharp, and until next time.